Maddie's Cash Flow Chronicles, or Maddie's thumbnails entirely are undefeated.
Undefeated, totally undefeated. Our thumbnail game is not like that, but
We don't even have one, and I'm fine with that. We don't work that hard at it, which is fine.
Yeah, we can definitely improve the quality level of the thumbnails if we took literally just 90 to 100 seconds out of our day to do it. But you can tell Matt spends like a good 5-10 minutes of like creative thought into like what he's gonna do, and like you could tell he tweaks it a little bit. There was one that he had that had like there was stuff happening in the background that was like inside jokes. I'm like, dude, this prompt must have been a whole page long. But yeah, he does a really good job with it. So shouts out to Matt Money and the Cash Flow Chronicles. Even if sometimes I don't agree with Chris, I sometimes I jaw at him a little bit on X if I don't agree. Which we'll get to Microsoft here in a bit. I know Chris had a view on Microsoft. But yes, we are live. Cash Flow Chronicles. Thank you everyone for being here. The Cash Flow Chronicles get the shout out, but this is the Money Mobsters, episode 15. I hope you guys enjoyed the last episode that we did with App Lovin in Niche Capital. Hopefully that was like informative. I know Dougie, you started like a little baby position, didn't you? Or did you dive into the deep end?
I had a little baby position to start with, and I have been adding to it as the market has taken 5% signals and magnified them into 500% signals both directions. So yeah, like I feel like I've just been being cool, calm, collected through all this stuff, and I'm gonna get rewarded for it because people are losing their minds to the high side and then to the downside, and I'm just.
Are you talking macro? Are you talking software? Are you talking high beta growth?
I'm talking everything, especially that stuff in related to Iran.
Okay.
Or maybe other things that Iran is masking. But everybody, it's like, oh, peace today. Everything is up. Oh, no, turns out it's not going to happen. Everything crashes. Gold is trading like Bitcoin. Because it just gets memified. Like everything that gets popular gets memified, right? We have these crazy funds coming out that are, valuing Anthropic at $5 trillion and stuff, and people are paying for it. And I just like, this is how burdensome financial regulations and rules get written to keep the average investors out of the best stuff in the market.
So I responded to Mitt's post
about proved that they can't tell the difference.
And, I said Financial Darwin Award, read the prospectus, folks. And because had you read the prospectus, you would have saw what was already in there, which Amit pointed out. So shout out to Amit for doing the Lord's work there. But yeah, I just feel like a lot of people, they would save themselves from a little bit of self-destruction. But I think I can explain why gold has been so volatile. The U.S. petrodollar has been so unquestionable for such a long period of time. And, the Russian central bank and the Chinese central bank have both, done a lot of effort to accumulate a lot of gold and try to even get BRICS going to essentially dethrone the dollar being the U.S. currency, because both countries understand that if you control the currency, that's like a really strong chess piece to have on the board in terms of like who's going to be the global hegemonic power. So I think gold was essentially a long bet or even a hedge. Either way, you could play it either way. If you think that China's going to win, or if you just want to hedge and own exposure to, maybe the U.S. is not the global dominant superpower it once was, you could buy some gold and hedge that risk. And I think that's done really, really well, particularly as we see that all these like Alex Jones level conspiracy theories, it's like, holy crap, like why was this guy right so much? And people start to doubt and they start to have questions. and it's a really really noisy environment right now too. You've got the media really just like being against the administration, and it doesn't make America look good when the current administration is kind of trashing the previous administration, and at the same time the current media is trashing the current president. It's like, wait, so who's been running the country like the last 3 terms? Like what are we doing? We don't like either of these guys. So I understand the gold bugs. I get it. Like you just want a steady value of wealth, and currency has been debased by inflation, and you can even hear the bond people talking about how our debt just keeps going up, 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 and just quite honestly, we haven't done a great job of proving credit worthiness. Doug, what are we looking at here? We've got a chart of NVIDIA. I'll stop my rambling about a bunch of broad geopolitical stuff. We're looking at NVIDIA.
Yeah, I'm just looking at this range that it's been in since, October. Like, it breached above here. So we marked this as the high when we set a Fibonacci retracement. And yeah, it just come down. It's just been pinging this 236 level. It's like, this is huge support. Typically you see retracements larger than this, but I mean, this is showing massive support. And we know why, right? Because NVIDIA is making the money. And they're not stopping. And they're coming out with new products to grow their moat.
Can I ask a question?
Yeah.
So I understand obviously the fundamental story, the technology story, the moat story, the growth story, even the pricing story. But TA is not my strong suit. How do you know when you look at this chart? How do you know that this is support and not resistance? Like, how can you tell those two apart?
Well, support is just it's a price area that, or it's an area that prices don't move into to the downside, and resistance is to the high side. So if we look at this section here, I mean, just look how many times once it rose above this 171 number, right? Boom. It came down for a couple days, flirted, and then it got rejected so high. There's so much support here. It gapped back up, tested one more time, and then made an all-time high. And it's come down and tested this 170 number several times, and every single time it has bounced back off. So, like if this was to break down, we would see it fall probably almost immediately down to the 150s, 145 level. It won't take very long to move that far. And then we look at RSI. It's still a little, it's in the more oversold than undersold. So that like it's just catching up, right? Like
now, NVIDIA, the stock itself, has a history of doing this, correct? Where it will stall, and then like the pressure will just build up, and then it'll explode, gap up, and then find its new home for a little bit.
Well, it runs out of sellers is what happens, because everyone's because the reason everyone sells NVIDIA is because it's hardware, it's chips, it's cyclical, and eventually you run out of people to sell that. We're going to run out of people to sell that BS to, and then we're free to go high. But people are still willing to borrow these shares and sell them because they think NVIDIA is cyclical, and that means they're just not paying attention to what Jensen is doing.
So yeah, we can jump down the NVIDIA rabbit hole a little bit. So to put it simply, I think that it's going to be a sustained demand tailwind for 26, 27, 28, continued on through to like 33.
2035.
Yeah. So, but can you dive a little bit deeper on that?
And then come hit me up again, because and everyone says, oh, they'll be done with their CapEx build out. Well, great. Then they'll have 8 years of unmet commercial graphics GPUs. Their original market will be, dying for new technology. So then they'll be able to meet that market. Like it's just
So not only are you going to have like sustained growth demand in the areas that pull compute already, right? So all the things that are already proven use cases, which is why cloud is such a massive business already today. But you're also going to be, and those businesses that already exist, they can grow, mid-teens, 20s, even 30% plus. But you're also going to have all these new additional industries, including the LLM usage with Anthropic OAI, Codex. You're going to have Gemini doing their thing. You're going to have Gen AI and advertising. You're going to have robotics. You're going to have full self-driving. The list just goes on and on and on about all these extra areas that are going to be completely new organic demand that will be growing for a decade plus, if not 2-3 decades in some cases. So I think, is there anything that you want to add to that, Dougie?
Yeah, NVIDIA is becoming to industry and business what Google is to the consumer. Like you are not going to be able to have a business and not at some level be touching NVIDIA products. And basically that just all gets passed on to the consumer anyway, because we all use the goods and services of industry and commercial work. So they're just going to be generally a layer removed. Maybe you'll have a robot that'll be NVIDIA branded, but it doesn't seem like that. It seems like NVIDIA is going to be content to sell hardware to everybody building technology. But if you buy a car in 2035 that's not a Tesla, it's probably going to be powered by NVIDIA.
Yeah, and all the compute, Jensen mentions a lot, and I know you wanted to talk about this. The level of compute that's needed right now, you can make your own chips for free, which obviously isn't the case. You can't. You have to pay Broadcom or somebody else like Marvel. But even if you made your own chips for free, because of the existing demand that's happening, you would actually be spending more money to have a not as good of a chip versus if you were just to pay the NVIDIA tax. But obviously there's long-term like game theory that's going on there of, do you want to own the vertical stack or not, or just be like dependent upon NVIDIA. And the other thing I was going to mention too is that NVIDIA, you have to think of them as an infrastructure company at this point, a networking company. There's a lot more going on here than like, company designs and makes chips. They are a chip company and they crush that, but like there's a lot more to it that goes into this.
They have crossed the Rubicon now to the point where they are now not only designing new chips, they're designing new usages for the chips. And then they're just letting the market run with that. So that's insane to me. Like they might be investing in those companies, but they are driving the use cases fully.
Indeed. And I'm sure we're going to have a lot more to talk about like over the weekend, because especially NVIDIA, because I think this is one area that's going to be talked about a lot this weekend when we are in LA. So Dougie and I both are going to be in LA for the meetup this weekend. We could not be more excited. I think June's going to be there. We're going to have, I don't think Wong is going to be there, but we're going to have Sam Solid. Steve is going to be there. Do you know if Tevis is coming? There. Matt's coming. Michelle, Ray.
Yeah, Stephanie's going to be there.
Right.
It's going to be a good group.
It's going to be very
Dougie's
solid.
going to be there. Mrs. Dougie's coming.
That's right. Oh, and my fiance is coming. So that'll be very exciting. Can't wait to show her off a little bit.
Wong, I just saw Wong said he's going to be at the Singapore meetup. That's fantastic. I
That
don't know
makes
if I'm going to make it, bro, but I'm going to tell you, Wong, uh, that's going to be a work day for you.
sense. Yeah, that makes sense that Wong is going to wait for the literal Singapore meetup. But yes, we will be in LA. We will be out there doing the things. I think you had another chart that you wanted to talk about as well too, which was also sort of trading in a very tight channel. Amazon. I know this one is also getting lots of looks right now. Did you want to pull that one up? You said it's either 207 or 212 or 220, and not really any other option, right?
Yeah, I hadn't really looked at the chart, for example, per se. I haven't been following the chart, but I've just been looking at it like, every day, seeing either my covered calls are green or my um or my shares are green. Like it's just, I mean,
I mean,
and
if
today
you back it out to like 3, 4 years, I mean, it's been really range bound. You're not wrong. Like other than some macro events like the tariff announcement, like this thing it hasn't moved since the market really came back. So you can see it peaking there in like July of 24, where that 3 marker is.
yeah,
And ever
yeah.
since the 3 marker, it's just been basically sideways.
Well, the Elliott wave is a five leg, so 1, 2, 3, 4, 5, perfect Elliott wave, and then a perfect recovery, A, B, C, down to like literally back to this retracement level. Barely breached the half, so didn't quite hit the golden pocket. But I mean, look, this is just fantastic, perfect trading. But now we're in some gobbledygook, and you see like even Dougie's like I'm trying to figure out what this is. This could be a Wyckoff accumulation phase, and so I was trying to see if I could draw something like that to fit. Wong someone like Wong probably knows better than me because I'm not very informed on the Wyckoffs, but yeah, I mean, you even look at this, it's a little head and shouldery, boom, 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 boom. So it drops down to here. But like, it just seems like the market is either like, and it goes back and forth day to day. And it's like, oh, Amazon is terrible because they're CapEx. Oh, Amazon owns Anthropic. Oh, Amazon's terrible because of its CapEx. Oh, Amazon owns Anthropic. Like, which is it, folks?
Yeah, it's a little bit bizarre that simultaneously the market is saying, and I know we've talked about this before, but the market is simultaneously saying that Anthropic is so fucking sick that it's going to take out all these SaaS companies that are doing hundreds of millions of dollars of profits, and that those income statements are going to be trash. At the same time, it's also saying, we don't believe your CapEx investment in AWS. We also don't believe that you own 20% of Anthropic. Huh? Like, make it make sense. I don't get it.
Right. Or we don't value, it's not that we don't believe you do, it's that we don't value the fact that you do.
How could you
Like,
not
well,
value it though?
you can't buy Anthropic. Like, if Anthropic is really worth $5 trillion, then Amazon's share price needs to be significantly higher. Just saying.
Okay, so you want to talk about this stupid VCX or whatever it was?
No, I actually don't. Amit told the mods the other day to ban people who were asking about it, and so I was like, "Oh, we're banning people," and now he like just keeps talking about it because I guess because it's so stupid. It's like an actual topic for discussion, right? And you know how he can be, very much the current thing, currently right now, is what's going on. So
Hey, content is content. Okay.
Yep. I understand. So I had a little bit of a whiplash. Like, wait, I thought we were banning this. If the boss is talking about it, well, I guess we're not banning it. All right.
Yeah, it's you just don't want people to take advantage of the audience. So
Right.
you have to defend against that at a certain point. But yeah, I get it. Then then it becomes like, oh, okay, this thing is actually moving, so now it's gonna get talked about no matter what. So it's a weird spot to be in.
Yeah. So what you been up to the last couple of weeks? We missed last week because you were having a little fun on your own business side of the world.
I wouldn't
Not the
call it
job,
fun,
unfortunately,
man.
but the personal finance part of things started feeling personal, actually personal.
It started feeling really personal. I guess to keep it short, because those who follow me on Twitter, like you've probably seen the two posts I've made about it. My house that I'm trying to sell, it's just been one thing falling apart after another. It's been on the market for like 7 months now, and I'm just being patient with it. It's a really slow market, and I've just had a bunch of issues with it, both with squatters, damages, and then security, and then the security company really letting me down. So that's what I was taking care of last week. So I appreciate the latitude that's been given, because um, it's been pretty stressful. I won't lie. So I, I took a deep breath, and I'm like, the house will indeed sell. There is an end date to when the torture will end. And it has been a little bit torturous, not to be dramatic. So I'm excited to eventually have that sold. Everything is now cleared up. We are green lights, and an offer will be coming in soon. If not, I'm
Fantastic.
just gonna have to sage the house. I even found like a black widow inside the house, which is crazy. So yeah, we're the house is haunted. We might have to sage it, but if that's what we got to do, that's what we got to
You
do.
got to do. Sell this so I can buy at these low prices.
Yeah, it'd be nice to have a little extra cash right now. There's a little bit of a dip going on. Um, I guess that's what I've been looking at right now, is just trying to see like, hey, how aggressive do I want to lean in on this dip?
Do you have a name you like right now, or are you just like, hey, just give me the software ETF for now? Like,
there's a lot I like right now. It feels good to
I
have
know.
stuff to buy again, because back in November, I'm not sure if you felt this way, but just 4 months ago, before the November dip, so maybe October is more accurate, 5 months ago, it felt like there weren't really any deals. If I had cash, I'm like, what would I really buy right now? Like nothing was really hitting me over the head screaming buy. And that's kind of changed a little bit.
Yeah. I mean, we were so bored in November or late October and early November, we were buying BMNR.
Don't say we. Don't say we.
But I had my regular buys going in. I wish I'd have been buying GE Vernova. That's a name I continue to like, and I just keep looking for an entry on it, and it just refuses to give me one. Like, I've had better entries on Nvidia than I got on GE Vernova. But
Wait, is this who I think it is? Yes, yes, sir. Yes, sir. Beautiful house. Dougie, do you know who this is? I don't think
no,
you
I
do.
don't.
So this is my buddy Tony. Tony actually lived at that house with me. So when I first bought the house, I was renting out other rooms.
Yeah.
Tony was one of my boys. He ended up renting a room, and like he was there for, I want to say like 6 months or so. But yeah, great roommate, really good guy to have. We haven't even been roommates for like 4 years, and still text every day. And
Oh,
he's
that's
like,
cool.
"Yo, what are you up to tonight?" He said he was gonna drop in on the stream.
Fantastic. Are you
So
coming to LA? It's not too late. There
he's
are
not coming to
houses
LA.
available.
He
Dude,
can go.
I am actually, like, coming from Houston, we've seen that some of the worst video coming out of TSA stuff are coming out of Houston.
Yep.
But that's not the airport I'm flying out of. Check this out. I'm gonna Hobby TSA. So they give you, like, at the airport, they give you a time check. I don't know. Is this Sharon still? Is it
Yep.
Sharon? That's, yeah. Yeah. Look at this. Look at this. Look at this wait time. 5 minutes.
Well, they put ICE agents at the airports, right?
I've seen that. I've seen people trying to act like they're outraged by it, but I haven't actually seen it. So maybe.
Oh no, I made my flight.
Right.
Anyways,
But no, the best meme of the day though, like I put this in the mod chat. I don't know if you saw that. But not everyone lives around here, right? So like not everyone lives in the South, so not everyone gets the joke. But if you know, you know. TSA wait times or airport wait times eliminated after TSA checkpoints taken over by Chick-fil-A.
Oh yeah.
Like, because I don't. So
they move you through that line, man. Chick-fil-A.
Don't live here. You could be third in line at Wendy's, or you could be 2 times wrapped around the store at Chick-fil-A, and you'll get your Chick-fil-A order before you get your Wendy's order. And that's not an exaggeration. There were actually counties in Texas that contracted out to Chick-fil-A during the pandemic, that contracted out to Chick-fil-A to have them manage the drive-through COVID testing.
Yeah, they have a system. They've got it down.
Yeah. Hi, Lisa.
So the next thing I wanted to talk about here was there's actually 2 charts. Let me make sure I've got the right one here. Yeah, we can start with this.
You showed me this one earlier. This is a great chart.
Okay, yeah, we can start with this one, then we can get to the one Steven shared. Let me zoom in here because I know the text is kind of small, so I'll get it as good as I can. Sorry, guys. Here, I'm just going to go full screen for this.
That's fine. They know what I look like.
So I think that's probably the best it's going to get here. So I'll just read off some of these. But what this is, guys, on the left, there's a logarithmic scale of S&P 500 index. So that's just like your view. And you can see it goes from $10,000 all the way up to basically $2.5 million. And in the middle are all these different events of times that you could have panicked and freaked the fuck out and sold your shit. Okay, so one of these is Black Monday. One of these is the Space Shuttle Challenger explodes. One of them is Reagan and Gorbachev meet. The next one is, the fall of the Berlin Wall. This one is particularly relevant, right? Iraq invades Kuwait. The next one is EU launches the euro. It's like, oh my goodness, is the dollar going to be upset? Then you've got 9/11. Then you've got Hurricane Katrina. You've got Saddam Hussein getting executed. You've got the U.S. invading Iraq. You've got ISIS invading Iraq. So once again, like a bunch of Middle East stuff here, all in the middle. This chart doesn't go back far enough, but the similar principle applies when JFK, took a convertible ride in Dallas. The point being here, which I think is probably timeless wisdom, not because I'm sharing it, because I'm stealing the idea from people who are smarter than me, but stuff is going to happen, and the markets are going to have some reason, and particularly the media is going to have some reason to latch on to something that scares the crap out of you, and the market just goes higher. And yes, that doesn't necessarily mean that's always going to happen. Be realistic. What do they say? A previous performance does not indicate future results, and this is not financial advice, but this is the history of what's happened over the last 50, 60, 70 years, where wild geopolitical stuff happens and the market grinds higher. Dougie, what say you?
Never stop investing. Yeah, I mean, it makes such a salient point, right? Almost to the point where, the text was real small. So for people that couldn't see that, pull that up one more time, and just want to highlight the number at the number at the bottom left, and the number at the top on the right. And I assume this is that amount of money just allowed to grow, or that amount of money that was continually invested. That was
Yeah,
what
if you invested $10,000 in 1970, it would be worth $2.64 million in 2024, and that's just the index. Now that is a long time, 50 years, right? Like, so that's
Yep.
like basically if you invested $10,000 at the start of your career and then you lived a full working career and then retired. But of course, you can add along the way.
But $10,000 in 1970 bought you a house and a car, and
Sure.
probably a college education.
Yeah, so this is nominal. That's a good point.
Right.
This isn't inflation adjusted, but it's still very solid growth.
Yeah, I'm just the point being, it's not like everybody was like, "Oh, I can scrape together $10,000 to put in the market in 1970." I mean, I can tell you, for example, when my father passed, we were going through his office and going through all his, all his old papers and everything to find out what we needed for his estate, blah blah blah, whatever, right? But we found an old letter, and it was from he was an engineer at GE, and this was like the year I was born, and it was congratulating him on a promotion to a new job and a raise. Something. We're happy to announce your new title of senior nuclear engineer at the plant in South Georgia, and a raise to $11,500 a year for a senior nuclear engineer. And I was just like, wow, numbers have changed.
Yeah, we got off of the gold standard and things changed fast, didn't they?
Yep. So I guess the point was, we look back at that chart and it makes it look so easy, but finding $10,000 in 1970 was not like it is today.
Sure. But if you dollar cost average along the way and keep investing, keep buying, keep accumulating, you're not complaining. The next one I had here was this was one that our good friend Stephen Fiorillo shared, and it says don't stop investing. The market is always crashing by double digits. So what it's pointing out here is that along the way you've got pretty significant drawdowns. And the drawdown that we're in right now hasn't even hit 10% for the S&P 500. Sure, like IGV and some other stuff has gotten hit. Private equity's gotten hit. Financials have gotten hit. And it's really volatile just in general with high beta, high growth. But this is if you just take the market at general, so macro, across best 500 companies in the country, you have a bunch of drawdowns. Basically, at least 5 a decade that are 20% or more, or rather 15% or more. But the point is, if you're investing in individual equities, like this is the index. If you're investing in individual equities, this is going to be even more more up and down than the index will be. So I thought this was a really, really, and I should like this. How dare I? I already did like it. My bad. This is a really, really good lesson for people to learn about when you hold equities, what is the actual risk profile? And is it normal to see your account be read once every few years? And the answer is yes. This is how it works. Markets assess, they reassess, they get in love, they fall out of love. And that's just Mr. Market doing its thing. In the short term, it's a voting machine. In the long term, it's a weighing machine. And this is evidence that sometimes the voting machine gets a little ahead of itself.
Yep. I mean, the toughest part to me is like from 2000 to about 2010. That was just brutal.
Because you had the tech drawdown, and then GFC.
Yep.
49% and then 57%. Imagine, guys, a lot of people here in the chat, I know you're invested in technology companies just like I am. This is the S&P 500 drawing. It's getting cut in half twice. Imagine like what the QQQ is going through.
Oh, I don't have to imagine it. I was there.
Were you invested in technology companies at the time?
I mean, they were all the ones I was interested in, so yeah, that hadn't changed.
And how did you like manage that? Did you like just give up on the market at that point, or did you
I
like
didn't have
keep
any. I
buying?
didn't have any money, so it wasn't that much of a problem. But it
Okay.
was just like you never, like you couldn't get anything going. You know, as a Microsoft was $42, right? Like, or you bought it like 47 and went down to 42, and you're like, oh, I'm selling this shit, right? Like, I can't take any more of this loss, and you're just getting started, so you're not used to. You never saw any green, so it's hard to get started if you never saw any green. Like if you're just putting money in and it just keeps going down, right? Because you started in say in 2001 or so, then it's like, why am I doing this? Every dollar I've ever put in has gone down. I've been better off holding it putting it in a CD, right? Um, so yeah, like I mean, front row street seats. It was tough to do. Lord knows I did not do a good job of it. If I did, I would have just bought and held Microsoft. I'd be sitting on my 100x there. Anyway, that's my little rant. But
That was a
when
smooth transition.
you
I
want to
thought
know why Gen X are so bitter and jaded, now you know.
So a few things that I wanted to share about Microsoft. And I think we're going to have a friend of the show come on here in a second, but I wanted to dig into Microsoft for just a second. So Microsoft, and I'm going to pull up a few tweets here. It's really cheap right now, guys, in terms of like historical valuations. You can see some of the stats here that were posted by Pascal. 21.8 PE. And yeah, you've got like the free cash flow problem, but 21.8 PE when they're growing the E side rather quickly, I thought that was pretty strong and telling. Again, not financial advice, guys. Do your own research here. But, by price to book, price to operating cash flow, and price to earnings, this is the cheapest that the name has actually been since about 2018. So here's the tweet that I put up earlier today, which was a few fun facts. 80% of their CapEx last quarter was paid with cash. So not debt, not like some fairy tale money, paid with cash. Microsoft reduced their debt from $75 billion in 2018, steadily down to $35 billion today. Last quarter, their net income was $38 billion. So that means that just the last quarter alone, they made more net income than their total long-term debt. They don't have any short-term debt. This is the cheapest Microsoft. Well, I just covered that. And even their price to book. Their price to book is also the cheapest it has been since 2018. Their profit margin they posted last quarter, 47.3%, highest profit margin for Microsoft in the last decade. And their book to value has tripled in the last 24 quarters. So like the last 3 years, they've seen a tripling in their book value. So here's their long-term debt paying it down. Here is their book value tripling, and since December of 2020, and then their profit margin. Again, you can see the general trend line is up and to the right. If I adjusted this for trailing 12 months, you'd see that a little bit more clear, but 47.32, by far their best and most profitable quarter. And here is their historical PE ratio. So you can see that, for the last few years and even during COVID and into 2021, they were getting a really, really premium multiple in that 30, 35, even 40, almost touching $40 range. And now it's all the way down to 23 just on the back of like OpenAI suddenly falling apart and cloud growth going to shit. So I did think that was interesting.
On that last chart, it went back to 2016, and that's when I was talking about when Microsoft was in the 40s. Maybe it was 2015, but that's when Microsoft was not $40 in the PE ratio, but I mean the stock was in the 40s.
And now it is at $370, even after like a 25%, 30% drawdown, somewhere in there.
but that's because the income has moved geometrically.
Indeed, it has. Here was another great chart that
Shout out to
was shared.
Satya Nadella. When you thought Steve Ballmer would be the answer, he was not.
Yeah, and Satya came through. Here is the enterprise value over operating cash flow. So this is the lowest it's been in the last 7 years at least. So
not financial advice, but I think what we're pointing out is there is some value here that you might do well to spend time investigating.
here is just another one here for our more technical folks who like a long-term trend line. The purple line is the 200-day moving. So do with that what you will.
That feels like it's set to explode. When's the next earnings? Like, what's going to be the catalyst that does kick it off? Or is it just going to be, hey, it was Tuesday? It could be April 9th. It could be. We could do that again this year. Does Dougie get another big Christmas present or another big birthday present?
Yeah, I mean, maybe that. It could be macro related. It could be a tweet. It could be geopolitical. But, it could also just be the market finally realizing that they're getting value. Like the cloud customers are getting value out of using Codex and out of using and consumers using chat and also enterprises using Anthropic, and that the whole ecosystem is really just booming. Because right now it feels like the sentiment, the popular narrative is against AI, and that this capex is overblown, and that these companies are wasting their investment by putting money into these giant capex projects.
Yeah. And I'll tell you, they are. My sense is what we're spending all these billions and billions of dollars on is basically the equivalent of America Online and Prodigy services back when you had 2400 baud modems. That's what the H200 is. It's a 24 baud modem for the AI revolution.
If they can show though that the money that they're spending isn't being like wasted, and that it's going to lead to ROI, and that they're going to fulfill the backlog, I think that solves Microsoft, especially if OAI ends up finding profitability with the amount of users that they have. That would just be such a win-win.
I guess what I'm saying is we're 30 years from knowing what the AI is really going to do for us. Because you have to have a generation that grows up in it, and they just live in that soup for them to really be creative with it.
I think we're already there.
Ideas on what to do with the tech. No, we're not even close.
Everybody's pushing it. Every large enterprise is telling their companies
they don't know what to do with it. I'm telling you, like when America Online was a thing, nobody imagined YouTube. It just wasn't physically something that anyone thought was possible.
Right. So that's what I'm saying. On top of what we already think could be possible use cases, and the ones that are provable. So you've got like provable ones. We've got ones that aren't provable that have high potential that we can already foresee. And then we've got a third category of ones that like we haven't even imagined yet. That's all going to drive everything, right? Including Azure cloud demand, right?
Yeah.
And with that, we've got friend of the show, has not been on the show before. You guys might have seen him in the chat though. Wong, he wanted to show us something that he built using AI. So, Wong.
Hey, what's up, guys?
Welcome to the show.
Wong.
Okay. Okay. So I just went crazy with Codex and Claude, and I was really surprised by like what it was able to build. Okay, so I wanted to build something like a Godel terminal or like a Bloomberg terminal, but I think honestly, because I'm using a lot of free tools, I fell short, but I think I was able to get pretty close, right? Okay, how do I? Okay, yeah, there you go. So now I've never used a Bloomberg terminal, but I've used a Godel terminal. So this is an app I built in Python. I didn't use a website because I didn't want to pay for hosting, and I don't even know how the backend works. But there's like a ton of features in this. So you have the dashboard page. So we have, there's a ton of things here. So I got my portfolio, I got analyst price targets, I got live newsfeed, I got my charts, and I got top options volumes by week. So this is a feature that I think I've never even seen it before. I was just able to build it in Claude. So we have the 0 week, the 2 week, and the 4 week. Okay, I think I jumped in a bit too quickly.
No, this is great. And so what are we looking at here? Why are they all TSM? Is that just...
Oh, yeah, I can actually select a different ticker from my actual portfolio, and it'll just update everything on this page.
Oh, okay. So it's done by
Yeah.
ticker. So it's telling you
Yeah.
all the top options for that specific name. So not necessarily the whole market, but if you want to really dive deep on the options flow for a specific name.
Yeah, so this,
that's cool.
in theory, would help me sort of, analyze my own portfolio. And you can also, pick stocks that are not in your portfolio as well. Like I currently don't have SPY, but if I just type in SPY, it'll just auto-populate everything.
This is awesome.
Yeah, I have basically no coding knowledge. I was able to just build this in anti-gravity, which is a IDE. And there's like I've built like a ton of features. Like I said, I went crazy. This is the actual portfolio tab. I have like 3 portfolio slots. I have the dip finder from Joseph Carlson's Qualtrim, but I've never used Qualtrim before. And then I have portfolio weights, and I have options position as well. So I think I just wanted to like get an idea of just some feedback, right? Of what you guys think would be cool to add, or like some features that I've never thought of, right? Because I think it's very hard to find actual users. And this is, by the way, it's on GitHub. Now, this version is not live yet because I just changed a lot of stuff. So yeah. Should I just keep going? Guys, hang on. I can't hear. Okay.
Oh, sorry. That was operator error. Earnings transcripts. What about earnings transcripts? That I feel like those are kind of tricky to find sometimes.
Okay.
You have to like sift through a bunch of garbage websites to get one.
I haven't built that in. Because so my focus with this app is that there are features to export data that I can put into an LLM, right? So I haven't built in any LLMs because I don't want to be reliant on a subscription. So let me see. Okay, I do have, for example, let me go to Google. And in this page, which is very similar to Visual Stocks, you can go to their website itself. I don't think it's shared here. It's fine. You can go to their website, and you can also go to their investor relations. So instead of having to go to Google and have to find all the things, it'll still pop up in Google, but it'll search it for you.
Okay, and so when you're clicking those, it's actually just opening up a tab in a browser. Got it.
Yes, it's opening. Yes. Okay, so you wanted like a earnings transcript? I'll write that down. Maybe I'll go crazy again.
It wouldn't be a bad idea, like an earnings transcript and maybe even like an AI quick summary of it at the top for those who just like want to see it at a high level. What do you think,
Uh,
Dougie? I think he's got
Yeah.
a lot of great shit in here.
Yep. I was actually looking at the scanner, the option scanner. Is like, does that have to be filtered by your ticker, or can it just look in the market for, you can just give it, you know,
uh,
like a
this
certain
is
market caps or something
yeah.
to filter by, and it can pull all these?
No, this is only
volume?
based on your single stock. Yeah, I do have something for like market cap weighted, like ETFs. I have ETFs by asset under management. So this sort of filters everything, and then if you click, it'll take some time to load. In theory, it should give you all the tickers, and you'll be able to export this. It will save to your clipboard, and you can either put this into a spreadsheet or an LLM. But there is some caveats. This feature doesn't really work on all ETFs because there's just way too many. There's some problems with actually finding data because I'm using a lot of free sources. Let me see.
Oh,
Let me see.
okay.
What's the yeah? Okay. So back to the news. Let me try a feature. So let's say I have all my news here. I have my all portfolio news and market macro news, and there is a news briefing here. But this news briefing is based entirely only on like a hard coded message. So there's no LLM integration here. But I can export all the news articles, and I can actually open like Chat GPT, and then I can paste everything in Chat GPT. Let me see. Let me try to share it. Wait, let me see.
You can only share one thing at a time.
Oh,
So
right.
that's part of the limitation. So we could drop this off.
Okay, I'll present another one.
Mm-hmm. You would have to unshare this one first, and then you'd have to. You can share a window or a screen as well.
Sorry, guys. I have no idea how to use. Oh, there you go. There you go.
Yeah, StreamYard
Okay.
is its own special. All right,
Yeah.
Lisa's asking for the number one probably signal for trading of all time.
You
Does
mean
it
like
show
a
Trump
technical
tweets?
signal?
Does it show Trump tweets in real time
No.
and or Nancy Pelosi trades?
That would be more insider trading. I'll write that down.
Yeah, some
Insider.
politician trading. So like, basically the members of Congress as well as even like state level politicians, governors.
Yeah, maybe I'll add like a politics tab. Trump. Yeah.
Because that's
So
one thing that I go to Quiver Quantitative for right now, and that's all that I use that website for.
yeah, that would be a very hard thing to integrate because it's likely like proprietary sources. Yeah, so if you paste all your news into your LLM, it's like LLM agnostic, right? You can pick any LLM, and then it'll just show you like what's happening in the market. So yeah, so I think this would be very like helpful if you don't have any time to like. I think it's already beating the human, right? Because there's no way you are able to screen 130 news sources just like that. Okay, I'm gonna share my. Let me see. Sorry, I'm gonna go back to budget terminal. Okay. So that's the news section. Once again, this is all not LLMs. This is what would you call it? Like hard coded, right? Okay. So there's also the sectors tab. This will tell you like where the money is sort of rotating in the market. So in theory, right, if there's a strong rotation, you would see a lot of red parts and then some green parts. And then there is like I think there's like 10 tickers that you can look. And if you actually click on a ticker, you'll find like a chart. So that's the second step. Uh, okay. Then by the way, the charts tab, Dougie, this is actually like faster than TradingView. There's no load times. So I just found that interesting. Like I could actually build something that is faster than TradingView. But the problem here is that I don't have as much live data. So one thing I noticed, the 200 MA, I think it's broken because the data source that I'm using doesn't go back beyond 2021. So there are a couple of problems. Like if we talk about SaaS software, I don't think SaaS is necessarily dead, but maybe it will push like SaaS to improve, because I noticed TradingView has actually gotten faster, but there's still some problems loading a lot of the applications. And I think when they found out that people could just build TradingView, they needed to like improve their stuff. And then there's also the multi-charts. This is something that I wanted for a long time. This is all your charts in your portfolio so that you can sort of get a grasp of which ones are down. But you can get something similar with your dip finder, right?
Right.
Yeah. Then we have the options chain. So I like to look at BMNR options like 36 days. And I actually built in like a strategy. So once again, there is a problem here. I don't think the Greeks are necessarily the best. So I think for this sort of strategy, you should always take it as like a second opinion, instead of just directly using it. So yeah, I mean, what I'm showing here is I'm not even trying to get people to use my app. I'm just saying like, go like build stuff, because it's entirely possible right now. And I think maybe people don't really understand like what the Codex or Claude is necessarily doing, right? So
Well, so
I just
you
wanted to show.
this on Codex, right?
So I've used Codex and I've used Cloud Code and I've also used Gemini. What I found is that Gemini is basically completely useless in terms of coding. Codex would be the mid range, and then Claude is the absolute top tier. So there's a reason why Claude is has so many people saying that it's good or it's one of the best. It's true, but Claude is extremely expensive. I think like Codex is probably 1/10 the cost of Claude. But Codex, I would say the output is like 50% of Claude.
And how long did it take you to build this?
Wow, this is under a month. This is like 3 weeks. I still have my original Cloud Code subscription that I started when I built this app. So I built all this in 3 weeks.
That's amazing.
And I think, yeah, if there's like a professional like coder or programmer out there, could I build this faster and at a higher quality? But I think this app is pretty good for using basically free sources. There's no subscription tied to this application, and the goal was actually to build an app so that I wouldn't have to continue to pay subscriptions. Yeah.
What would you say like your level of skill for like coding is? Like before any of this, like are you proficient in any coding language, or was this like brand new to you?
I would say this is brand new. This is absolutely brand new. Yeah. So I mean, it's just, I think this is like insane. I just wanted to share. Yeah.
Yeah, this is great share, and you did a really good job with the app, and it's incredible what you can do in just a few weeks with some like a picture in your head of what you want to build. You can just build it now.
Yeah, and maybe is this why Wall Street is pricing like SaaS software into the dumpster?
Yeah. So what really becomes valuable is not the app itself. It's the companies that are willing to pay for the reliable data. So Wong is able to build a total front end to encapsulate and show all this data he has, but he still doesn't trust his own data if you hear him talk.
Right.
Versus something like Visualize Stocks, that guy, he's paying for the API, he's got a trusted source of data. So it's like we can build a front end on anything now with data. But if you are doing something important and you need actual data you can depend on, you can't vibe code it for free, let's say. Now, if Wong wanted to pay for the APIs or whatever for the stock exchanges to, start getting their real feeds, then he would have to charge more for his app, and he's probably ends up paying more in tokens than it would be to like pay human beings to do stuff. This is what things look like they might be becoming shortly. I think there's going to be a hiring glut in the near future because of that, because the cost of tokens is just the tokens can't keep up, so the cost is gonna
the cost might go down. The cost of tokens might go down
because of the supply that's coming online.
No, just pure like efficiency from the chips. So the chips get better at producing tokens.
Yes.
For the same amount of energy.
Yes.
But at the same time, as the tokens get more and more useful, the demand continues to go up.
Right. Because right now
classic Jevons paradox.
Right. Yep.
There is a problem where the AI would give a wrong output. So that would essentially mean that the tokens were wasted, right? So if the models get better and the tokens get easier to produce, then that might help with like the supply chain. Like you don't need as much memory. Yeah.
So that actually segues very well into the question you had earlier about Google's new memory news or their encryption algorithm.
Yeah, they had an algorithm that apparently was supposed to compress.
Yeah, not encryption, compression.
Yeah,
and that killed off a bunch of memory companies' stocks today.
I wouldn't say killed off. They took a small punch.
They took a hit. Look, so but here's what you're stuck with. If you have uncompressed data, you need to store more of it. If you're compressing data, that costs CPU cycles, and so you need more chips. You don't get performance improvement for free.
Right.
So you either need to buy more compute, or you can do less compute, but you need more storage. So pick your poison. Because, like I said, because you're not getting it for free. The way I look at it is both of them actually get yes. Because the instant you apply more compute to the problem, you're going to be able to do more, which means you're going to just store more stuff, right? We're going to go from 320 VGA to what was the resolution? 640 SVGA, 32-bit color. Like, I mean, and then from there on, it's going to go higher. 1080 and 6 million colors and so on and so forth. Like, it just like you can compress it all you want, but you're still going to need compute to do that. And then the better the compression gets, the more throughput you have on via the fiber, so the more memory you need to store it all.
Doug, I love when you tell stories from the Revolutionary War. It's so great when you take us back in time.
I'm not taking you back in time. I'm taking you all the way back to, I don't know, pick a year. The beginning of Netflix, maybe.
I tease. But thank you, Wong, for coming on the show, showing us that. That was fantastic, and you've done a great job building that. If at any point you want us to plug that, we would be glad to help people save, whatever their subscription price is. But sure. Thanks for being on here. Do you have anything like you want to plug, like your X? Can I get your X on here?
I will say I am trying to rebrand like my personal brand. So maybe some other time. Maybe some other time.
Okay.
Yeah. I just wanted to
Okay.
show
Let us
you.
know.
All right.
Anyway,
See you guys.
y'all wait. If you come across Wong, pay attention because like a lot of people that we talk to, he may not always be right, but he's very he's always talking about the right things and he's always looking in the right places. So you may not always agree with him, but and he's human, so he's not always right, just like all the rest of us. But
Very smart guy.
if you're not listening to what he has to say, you're missing a lot of information.
I will be fair. I've been wrong on the market for the last like 6 months, but the market's been absolutely crazy. So I don't 100% blame myself. But yeah, I'll just say that.
Well, like I said, you're still looking in the right places. You're still building stuff and examining new things, and that's a hell of a tool. Congrats.
I just got to be more like not say crazy stuff because I always tend to do that. So I just got to work on that, and I think if I try like in 3 months, I'll try to be like better at it. So yeah, I'll just take a break from social media. I privated everything on my YouTube. I'll have to really consider if I want to like come back in the future. So there you go. All right.
Hey, I'm not gonna throw a glass in that rock or a rock in that glass house. I say crazy stuff all the time. But thanks for coming on the show.
Talking to the guy. Yeah.
All right. Thank you guys. See you.
Apparently, I've been saying crazy stuff since the Paleozoic era. So.
Yeah. I love it. Cool. I think the next thing we wanted to pivot to was just like a fun little Twitter interaction that I saw from you that I was like, oh yeah, this is going in the show. So tweet starts out, I know I could find a wife if only I had access to the Palantir database. Eliano, Palantir employee, responds, not even the Palantir database could save you. Burn. Chad, another Palantir employee, not to get technical here, we only provide software. We don't own or sell any data. Seems either way, it isn't going to help. Double burn. And then you give him the very wholesome advice, may I meet you. Classic.
I mean, it was just too obvious.
It was right there.
It was too obvious. I mean, Bros started off trying to be snarky about, Palantir, they have all the databases and they know everything and they're an evil company that gathers information on all of you. Well, have you tried May I Meet You? That might be all you need is some real freaking human interaction.
Is that what they did back in the Paleozoic? Human interaction?
No. Only Bill Ackman did that, and he's older than me, so I don't know. Was that the Triassic? Who knows?
Beats me. The next thing I wanted to jump to was Waymo and just like the self-driving improvements we've been seeing out of Waymo, Zoox, NVIDIA's on the way, and Tesla. So Waymo, since the last time that we had a show before the AppLovin episode, was they've expanded into 4 new cities. So the 3 major Texas cities, Houston, Dallas, Fort Worth, and San Antonio. They're already in Austin, of course, and they also expanded in Orlando. So 4 new cities for Waymo. They are going to be crossing over 20 million miles very, very soon, and it's taking off. All the people who said Waymo can't scale, sorry, you have egg on your face. It is what it is. Waymo is scaling, has scaled, all of the above. And I went Waymo watching, as I've coined it. I live in Arizona, so I have got to see this play out in real time. And anyone who's in like the WhatsApp group chat knows that like I spaz out a little bit when I'm like, what the hell? Like there's so many Waymos. I'm seeing them all over the place. And every single time that like I look around, and I do a mental reframing of like, is this more or less than I saw 3 months ago, 6 months ago, 9 months ago, 24 months ago? Every single time, it's like more and more Waymos. So occasionally I'll go out to an intersection. I'll just watch for a few hours how many Waymos will roll through this one intersection. And I last did this back in July, and I made to be scientifically consistent. Okay, this is not peer reviewed research here, but to have some level of consistency, it was the same intersection both times on a Saturday around the same time of day from like 5 to whatever at the evening. The first time I did it was 4 hours, and we averaged 40 Waymos through one intersection per hour. So 160 Waymos I saw for that 4 hour stretch. I ran the same experiment again a few weeks ago, and it was 50 per hour at that same intersection. So you're just seeing the volume continue to increase, or just the utilization. But either way, like I've just been really, really impressed with the level of progress that Waymo's made both in California and in Arizona. And I live very close to a spring training ballpark. And the one day I was working from home on a Friday at 1 o'clock. And, I can see the ballpark out my window. So I'm watching this happen. And all the Waymos decide that they want to drop people off at my apartment complex. And I'm seeing it go down. And I watched about 25 Waymos over the course of 5-10 minutes descend upon my apartment complex. Everyone was taking a Waymo to the ball game. This whole idea that like you don't even want to take a robo taxi to a ball game or like a large public event because that could be like too hectic. No, that's out the window. People are doing it. It's happening. I'm seeing it happen. So just an interesting little update. I know you had some stuff to share on the Tesla self-driving side, right?
I mean, if we use it every day, it's so good. We drive, especially in the spring, we drive to Baton Rouge, which is about a 4.5, 5 hour drive. 5.5 hours total trip with the charging stops. It's just, you get there, you're fresh, you're not exhausted. We drive home again the next morning, first thing. You get home right before lunch, and it's just, you still have your whole day. You still have all your energy. It's just amazing. I don't know. What are you thinking of something in particular I said, Austin? Because I know I say a lot of stuff off the cuff, but
I've noticed the general mood improvement among like the self-driving, like the people who actually own self-driving cars. And the part that's really confusing me right now is I hear it from you, I hear it from Amit, I hear it from I think even TJ, who owns some Teslas. I know Roy owns one. Everyone's reporting improvements in what's going on there, but I'm still confused what's going on with the approvals for L4 and the approvals for Cybercab. I don't get it.
I have no information on that. It's been rather opaque.
Okay.
We've heard. I mean, we know that the Cybercab, which is running on Model Ys, which I have a Model Y, we know that is probably several generations ahead of what we have now, because it's great software, but it's not able to function yet if all you had was a safety driver. At least I don't think so. Like, you still have enough weird things on the road that you have to provide some instruction to the computer, because it could be the thing where they're doing construction, so they've like shifted the lane, and so now the gap between the sections of concrete, kind of where it used to be, down the middle of the road, now it's the middle of or now where it used to be the shoulder, now it's the like just the side of your lane, and it goes, but they've like put in temporary paint to like shift the lane. And yeah, it's confusing for a computer. It doesn't know which line it's supposed to be following, right? It's recognized that there's a line there, It doesn't know which one it's supposed to follow. So those are the types of things where you do still need to pay attention. And most of the time, probably 9 out of 10, it gets it right. But there's another time where it didn't figure it out, right? And you're like, oh crap, let me get over.
I actually saw a video that was like that today.
It's not a crazy safety thing because you're going slow due to the traffic, but
yeah, there was a clip circulating that I saw today of, you've got so you're driving on the left-hand side of a 4-lane highway, and in the median they've got orange triangle with blinker at the top saying stopper flagger ahead, and then maybe a quarter mile after that you've got one of the trucks that picks up all the cones with the top arrow saying get over.
Yeah.
And the Tesla was a little bit late to it, but I would say that's textbook edge case, and I'm not worried about that. The important part is that it's working most of the time. But yeah, those edge cases are going to continue to pop up.
Yeah. And as they appear, they'll get fixed because the neural network drives the car very, very well. Someone was talking about the speed as well. And so FSD caps out at 85. It will not go faster than 85. And if you press the accelerator past 80, once it's at 85, it deactivates FSD if you go above 85.
Yeah, that makes sense.
My real sense, though, is that has very little to do with the cameras and the ability for the computer to drive the car. It has far more to do with the comfort of the riders. Because most people are not used to going faster than that. And just like road conditions, tire, suspension, all that stuff. The Teslas are generally pretty rigid suspensions. So if you're going much faster than that, you're going to have a less comfortable ride. So I think it has more to do with that. But yeah, it will absolutely go up to 85 miles an hour to keep up with traffic.
I think strategy mistake is the ludicrous mode, because everything that I've seen about that ludicrous mode actually is ludicrous. And I think it's only going to take a few accidents for it to spoil the safety image of self-driving. I feel like that's an easy thing to say, and I don't understand why they continue to offer the ludicrous mode.
Well, so ludicrous mode is for launch. That's for your driving.
Or sorry, not ludicrous. What am I talking? Mad Max. Thank you.
Yeah.
Sorry, that's
I agree with you. The implication is that it is going to drive like an insane person.
And it does.
No, it's actually the best. It's the best, most assertive mode.
But it also routinely does like 15, 20 over the speed limit, right?
Yes.
Yeah, so that's a problem.
Which you can still tailor specifically. But basically Mad Max mode means I want to pass everybody I can pass.
Okay. Can you rein that in?
Always overtaking. Huh?
Can you rein that in though? Can you say like I only want to do 12 over?
Yep. You can either set it to be a specific number or a percentage.
Got it. Still, I just feel like it's going to hurt their brand when bad stuff happens. It's going to get
publicized. And then the newspaper, it was in Mad Max mode. I'm like, okay, well, it was Elon making a joke and a meme in his product, which was funny at the time, but now someone's dead, and is it still funny? Probably not. Okay, so now it's back to assertiveness level 5.
Yeah, I just feel like they should get out ahead of that, but we haven't seen it happen yet. So like fingers crossed, hopefully nothing happens.
It is really excellent software.
I will say I am in the market for a new car. Like I have a paid off car that's kind of it's not a total beater. I mean, you'll see it in LA, but it's just been paid off for 7-8 years and it's on the older end. So, I'm gonna stretch it as long as I can stretch it. Yeah, free is for me. But my next car, I really want to like buy it new, have it be nice. I've worked a little bit and I've scrapped together some money. So I feel like I just want to buy new and have a car for me for the next 15, 20 years. And a big part of my purchasing decision is definitely going to be the self-driving capability, just because it is a game changer. So Tesla obviously is taking the lead there when it comes to self-driving cars that you can actually own yourself. But NVIDIA is launching something with Mercedes, so it could just come down to timing of how long does it take for NVIDIA and Mercedes to catch up to Tesla, if they do at all, which is another interesting question.
Well, are you going to buy a $45,000 car or a $95,000 car?
Yeah, I mean, I could do either, because if I buy the Mercedes, like I still own a Mercedes, right? Like, it's pretty sweet.
Yep. And Tesla is not famous for the most comfortable ride. They are very, very rigid. They are very, very, very sporty, but the suspension is very rigid because of the weight of the car.
Yeah, and what I've been looking at has been more on like the Acura Lexus side of things, to where I want to dampen road noise. I want it to be a smooth ride, but also at the same time, like, I have to drive across Phoenix traffic 3-4 times a week, and
put that bitch in self-drive mode and kick back.
Exactly. So like I have that decision to weigh. Like, do I really care about road noise that much, or would I rather just not drive at all? Like, there's going to be a trade-off.
Do you care about road noise when you're going 15 miles an hour in stop and go traffic?
Yeah.
No.
But that's not the only thing I use.
Are top notch too.
But my commute's not going to be the only thing that I use the car for. There's going to be road trips, and like that road noise does get to me on road trips, because then you get like sleepy. So there's a safety aspect as well. But who cares about road noise if you're not even having to drive the car? So it's
like I said, I get home and I am much fresher than if I have to drive myself.
Just don't be surprised if I end up getting the Tesla. That's all I'm saying.
I won't, because it's a great choice. Do you have Tesla power in Arizona?
We do. It is offered, but since I'm in an apartment, I can't exactly like hook it up in my garage.
Okay.
Yeah.
That's where it truly becomes the game changer, when it charges for free overnight, and so every morning you have a fully charged car that you didn't pay anything for.
Yeah, and then the economics get really good. But even if you don't have that, it's not that expensive to just charge it and pay for the electricity. It's less than gas.
Oh, for sure. For us to drive to Baton Rouge and back last weekend, I spent $15.
Yeah.
At Superchargers.
And that's
starting with 100 when we left the morning, huh?
And that's like all day driving, right?
No, that's about like I said, it's about 5.5 hour drive, including the stops. So if we leave at 6 in the morning, we'll get home about 11:30.
Yeah, so that's like a good chunk of driving for $15.
Yeah.
Especially with the way gas is going right now.
Yeah, and so that's like we'll use our battery that we charged at home, and then we stop at a supercharger. Then we go to Baton Rouge, charge there, come back to that first place we charge there, and then pretty much go home. And that is, like I said, about $15.
Beautiful. What else did we have to talk about? I think we're just gonna shout out the LA meetup again. Guys, if you're there, come find us.
Oh, by the way, shout out to the city of Tulsa. Was there last weekend for SEC championships in gymnastics. The wife and I flew out with the LSU booster club, and they put together a package where we took a private jet with the team, and then hung out with former coaches and everything. They took us to some really fantastic restaurants. And anyway, the town looked really nice. It seemed like a lot of fun. We were there for 2 nights, but had some really great food, nice bars. Got to meet some, minor gymnastics celebs, etc. Not that anyone else would think they are, but
Tulsa's on the upstream. What's going on here? Tulsa's coming up.
Well, Tulsa King is the show with Sylvester Stallone.
I apologize, Tulsa. I was not familiar with your game. Like, I'll have to do some homework. Well, cool. I think LA is going to be Saturday, and I think that's all we had for the show. We've got links in the description down below for Dougie's X, Dougie's YouTube, my X. Give us a follow, and we will see you guys next week. Thanks, everyone, for being here.
All right. Bye, everybody.